Jerome Powell and the Fed have a massive weighting over the crypto markets as well as the stock markets. And we saw that yesterday when he spoke, and that has now brought in some new volatility. But he is going to be speaking again today. We also do have the CPI inflation data, which is going to be coming out. And this is most likely going to set the course for the next major move for the crypto market. So in today's show, we're going to talk about some worst case scenarios. Since yesterday, he did say a couple of things that's already leading into, what may be disappointing for the crypto market. So stay tuned until the very, very end of the show. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into the show content over here. So Wednesday it is, right? The 12th of February, just before the beloved Valentine's Day. And will we have a sea of red sticking with that Valentine's Day theme? Well, we'll see later on today, because I do think this could shift the market. There is a lot of important things that we need to be focusing on. Also, as we witness the volume dropping, right? The 7-day moving average for the volume, we have been focusing on that a whole lot as well. And you can see that's coming down, right? So if we look at this CPI coming out later today, this is going to be 5:30 to 7 p.m. Dubai time. I'm in Dubai, so it depends where you are in the world. Mark that off on your calendar and expect that there will be chop and volatility leading into that. And you can see that, right? One day we're up, the next day we're down, the next day we're up, the next day we're down. And the chop does continue, because at the end of the day, we are range bound for crypto. But the question remains, well, what happens if you break out of that trading range? Where are the next major levels of support going to be? And that's what I want to talk to you about in today's show. I want to show you where major support will be found, what your worst case downside would be for Bitcoin if we do break the range to the downside. And the important thing to also remember is that, multiple ranges stacked on top of one another throughout these macro cycles create a broader trend, right? And so far it's been range, break to the upside, range, break to the upside. And so that story persists, which means if we do actually break this range to the downside, well, that could shift the entire market cycle, because that would be the first time within this bull run that we've seen, let's call it any form of a Wyckoff distributive pattern on a daily or higher time frame, which would mean the whole market is shifting, right? So I do think it's high time to pay attention. Make sure, again, you stay tuned until the very end. And let's get through this, right? So one of the things that I want to have a look at over here, this was a really good tweet from Nick, and he speaks specifically about the M2 money supply. So what you want to be focusing on is the blue one over here. That's your M2 money supply. Underneath that, we have the others chart divided by Bitcoin, which you can see has been going down. That's in pink. So blue line is the M2 money supply. And then we have the white line over there, which is essentially the global GDP, right? So here's your global GDP running towards the upside. And then you have Bitcoin price, which is the bar graph over there. And then we have the global M2 divided by the global GDP. Now, you get a lot of important information over here. Pointers, why are the altcoins continuing to bleed? And they've taken another hit, given what Jerome Powell said, of course, in yesterday's meeting. He's speaking again today, just as a reminder. Well, the reason is this, right? Essentially, what you need to see is you need to see the global M2 growth outpacing the global GDP growth. And this, in turn, will actually allow for an excess pool of nominal currencies with nowhere else to go. There's an overflow, spillover effect, and therefore it moves into speculation, right? Which is going to be the altcoin sector. So when you divide the global M2 money supply over here, this one over here in green, when you divide the global M2 money supply by the global GDP, this has theoretically been downtrending because it's barely keeping up, right? The blue line is barely keeping up with the white line over there. And we need to see an overperformance, which shows that there is that ability for the spillover effect to move into more speculative risk on assets, right? Bitcoin has been doing very well. The stock market has been doing very well because I think it's being taken much more seriously, Bitcoin, that being as a global, at least commodity or currency, whatever it is that you want to label it, but a strong asset that can move in unison with the stock market, which is why we've been so focused on what the stock market has been doing as well. That's been relatively strong. So what did Jerome Powell say? Well, again, he came in yesterday and basically said that he would only use quantitative easing when rates are at zero, which we're a long way from, right? And as Colin comes out and suggests over here, he says he has the path to rates returning to zero, and he has his prediction by the time the Fed funds rate is actually back at zero, we would already have had some sort of financial crisis. So it's not looking good, bruv. We need some sort of a miracle for the altcoin sector. That's what it's looking like over here. The sentiment is very short. It is definitely not looking good. So although the M2 money supply has been rising towards the upside as per this tweet over here, it's not outpacing the global GDP. So the shift that we need to see is with the Fed total assets. Maybe he's bluffing. If he is bluffing, well, we'll see over here that this should start to tick back towards the upside, which would be indicative that the Federal Reserve is buying back assets, right? And then you can trade in alignment with the Fed, and that creates the spillover effect, which could move into other cryptos. So currently, it's a downtrend, and that trend remains, right? So I think this is a very valuable chart. Post this on your wall, put it on your trading view, make sure you follow this when the green line turns up over here, which we have seen, right? We've seen periods of where it has moved towards the upside. This would be, for example, that COVID period. And that's where you just get these absolutely face melting rallies, right? Now, the good thing is that charts do move in ebbs and flows, and eventually this will turn back towards the upside. So we'll talk about the implications of all of this and what it means going forward. First, let's cover some of the worst case scenarios. Where is major support? $89,000 stochastic RSI has essentially bottomed out. So you are looking for the tides to shift and turn at some point very, very soon. We want to see this turn back up. You got your 21 weekly exponential moving average, your stop and reversal indicator, all of that at $89,000. Now, the at least significant thing that's happening right now, which you don't want to see happen, is we're losing the high volume profile, right? Over here, where you got the point of control for the volume. That is the point of control when you consider this overall trading range, right? So this candle just above my head on the left-hand side, this is the candle that led to the big upside move that took Bitcoin around that $110,000. And that was from a price point of about $66,000. And that's where we've started to form the new trading range. So this is what I'm talking about. If you can't get back above this high volume area and start to consolidate above there, well, then you might be testing it as resistance, which means that you may be going into some sort of a distributive pattern, which would be one of the first times that we've seen that within this overall crypto cycle. So ultimately, bulls will really be pushing for some sort of a higher low here. We've spoken about this. It's more a ranging market right now with the potential following your first higher high to put your first high low in, but we haven't done that yet, right? So something needs to give, right? Something needs to happen. Will the Fed save crypto today? Only time will tell. You let me know in the comments. What do you think? Will the Fed save crypto today? I don't know. All I know is that if we don't get back above this region over here, it is looking heavy, and there is going to be a magnetic draw into this region, right? You can see over here, he has your high volume, and then you have this pocket, right? Here is the pocket. Think of that like a little magnet that you can put in the pocket over there. There it is. That magnetic draw would basically pull price into that region. Now, there will be stop points along the way, which I'm going to talk about right now. Where are the most significant levels where you would find a stop point? I'm not here to scare you. I'm just here to suggest that if you can't get back above here, you know, maybe the Fed will put the nail in the coffin today and you'll end up getting that drop. There is a CME futures gap as well situated at $77,000, which is the lower boundary of this high volume area. But essentially, price can pull back into this region like a magnet. So the levels to watch, 77,800 to 85,000. Remember, low volume, right? Low volume. We are, borderline about to put in a lower low on this, right? We've been slowly putting in higher lows but lower highs, and if the volume doesn't kick into high gear very, very, very soon, as in now today, well, this is probably going to start to drop down into lower lows, and then again, it's not looking good, bruv, at that point, right? So let's add some additional levels of confidence. I did this with the well room members yesterday on the live Zoom session that we had. We discussed, all things crypto and every worst case scenario out there. And we lined up some key levels where you could potentially have a trade opportunity, especially if you are somebody that is cash heavy right now and you've been waiting for a long time to get into the crypto market. First, I just want to touch on, we had the TD sequential 9 count over here, which suggested 1 to 4 candle correction, right? I spoke about this explicitly, saying that it's 1 to 4 candles, which means you might only have 1 day, or you could have up to 4 days of upward price action. Well, so far it looks like it only put in 1 day, right? You had 1 green candle, next day red, and now we're on the 3rd day, which is also red over here. And what we wanted to see if it was going to be inherently bullish is we wanted overextended move, right? We wanted that 1 to 4 candle correction to absolutely smash through this 101,400 level, breaking some of that structure over there. But we said, if you come, it's weaker than I thought, right? I thought it would at least move up into this region and then reject. It's not to say that it can't be a little bit of a trap scenario with everybody obviously just trying to play the cautious side leading into the Fed. Maybe something good comes out and you do still play that out today. But essentially, as long as you're below here, there is risk towards the downside. But towards the downside, there is major support, right? So on that weekly chart that I showed you, have your 21 weekly exponential moving average and the stop and reversal indicator coming in right on this orange line, right? So that's going to be one obvious area at about 89K where you would put in a short-term bounce. And then if you lose that, this is where it all lines up really, really nicely for very high confluence setup, right? I'm not going to go through the whole breakdown process of how I found these levels as I did with the whale room members. That's for those of you that are in whale room. You get that extra value of seeing how we find these zones. But essentially, it's fair value gaps on multiple time frames. We looked at the monthly, the weekly, and the daily time frame. We lined up all the key levels using the key weekly levels, the monthly levels, the quarterly levels, as well as even the yearly levels. And then we found mid-ranges to see if there is any additional confluence. And what we found is that the highest level of confluence lines up around that between the daily and the weekly, right? Between the daily and the weekly fair value gap, which has the previous quarterly mid-range in that zone. And then on top of that, we used a Fibonacci level taken from the origin of the move to the exact top of this move over here. And then we found the golden pocket, which is your 0.618 to your 0.65. Now, again, if you want the whole algebra lesson of how we got to this answer, go into whale room. You'll find it over there in the Zoom session that was recorded yesterday. But if you're here just to copy paste and you want the answer, well, this is the level, right? This is the level that we're looking at over here. This is the most significant zone where I would say price has the highest probability of bouncing. If I'm here to pinpoint an exact level, I'd give you 83,101, and I would round that up to about 83,500-ish, right? So roundabout within that zone is your sweet spot. The yellow box over here is a high probability bounce zone, right? We would expect bulls to defend that and bears to capitulate after price hits this level. They'll probably take profit, and then you would get some sort of a bounce. That is, again, only if you start to break down the overall trading range, which means losing these high volume areas and getting that magnetic draw into this region, which just simultaneously actually lines up with what we're seeing over here. So that is your chart. That is your blueprint. That is what you can focus on for the coming days until such time as we either put in the high low and then we have some new information, or we lose the range low because we'll be testing this level for the 8th or 9th time, which means it becomes less and less likely of actually holding, right? You also have the 9 and 18 exponential moving average, which continuously governs price towards the downside. But we do have the presence of the bull moon, which just printed, and we've seen the success rate of this, which could give you a little bit of extra hopium. At the end of the day, you need to still get back above 96,750 to turn your RSI towards the upside. But if you can't do that and the bull moon fails and you break the bottom of the trading range in alignment with all of these levels, the high volume magnetic draw zone, once you lose that volume profile, the fair value gaps that line up with the previous quarterly mid-range, as well as the Fibonacci golden pocket, well, that simultaneously does also line up over here between your 200 moving average and your 200 exponential moving average, which I'll just draw a circle just in case you can't see what I'm seeing. That's the level, right? High confluence, high probability bounce zone. That is your absolute buy the dip, right? Your absolute buy the dip. Now, I don't expect that even if it was a worst case scenario and you hit this level, I definitely don't expect anything like this that goes straight through. But in fact, I would expect a massive bounce, and still you should put in some sort of a complacency bounce if this is in fact a changing cycle, right? And the cycle we're coming to its end, which I don't believe that it is. But as mentioned, this would be the first time that we've had proper distribution out of a range within the cycle, and multiple of these levels stacked on top of each other. And I'll just quickly highlight this to show you. Let's turn off the moons over here. So as you can see over here, this is the way the market has essentially worked, right? What we'll do is let's just grab a box over here. Let's put on the drawing tool over there. This is essentially what you see, right? Just excuse that it's, okay, well, let's fix this over here for you quickly. There we go. So what you're seeing over there, you're essentially getting a range, you break out, right? You form a new trading range, you break out, and then you form a new trading range, and then you expect that following that, you should break out, right? So that's what we're still waiting for. We're waiting for to see, are we going to get the next breakout or not? And if we do start to break down, that could be a sign of some sort of a reversal. Now, if you want to learn more, again, I have dropped all of this over here in the Whale Room Discord. There it is. Here's the Whale Room Discord. I've dropped all the levels, so you can copy them if you want those on your chart. All the other trades, analysis, everything is over here, showcasing as well, looking at some of the funding rates and things like that, to showcase, how fearful the market really is, as opposed to looking at the normal fear and greed index. Also, remember, there is a lot of traders in here that are absolutely crushing at these. Many of these are off of the calls. As you can see, they keep tagging Farouk over here, who's doing some absolutely wonderful scalp trades. I have an opportunity for you guys today. Given that the market is a little bit down, I thought that would make or give you a little bit of an opportunity for a sale with a discount. So this is going to be first come, first serve. This is the benefit of watching the shows live. Smash the like button. I assume that it's going to be taken first come, first serve by the live viewers. So we have a limited amount that are available for those of you that do want to get into the Whale Room. You're going to use the promo codes that I'm about to click onto the screen, and that is right. 20% off your first payment if you use 20 whale, and 25% off of your first payment if you use 25 whale is the promo code. This is limited. It's limited to the first, on this one over here, we have for the first 10 people, and this one over here is for the first 5 people, right? So first 10 people, first 5 people, that's how many codes are available. Jump in, use it, or don't use it. If you want to get into Whale Room and you've been waiting and you're on the edge, I think that's a nice opportunity for you. Now that we've covered some of the worst case scenarios and the low downside targets, let's talk about where we're at and some of the potential more positives, which means you have to zoom out. When in doubt, zoom out. And then there is some more positive things to look at, which would be this, right? So far, the cycle is following more or less along according to what we've seen in the price cycles. But if Bitcoin doesn't start moving very, very soon, it will deviate, right? Deviation means moving away from the mean or the average of what we usually see. Now, the cycle that it's most similarly resembling is, of course, the 2017 cycle, right? So 2021 is the green, dark blue is this cycle, light blue over there is the 2017. And as you can see, so far, so good, right? So far, so good. We're following more or less along. Yes, it can deviate here and there, but for the most part, you can see the 2017 cycle only really started to get running, about 84 to 90 days in, which would be around March, right? So we'll keep an eye on this. That is a little bit of hopium. The other bit of hopium that I have for you over here is if you remove the upper and lower band. Well, firstly, let's just throw this on. You can see during bear markets, you move away from the fair value, which is the red line, and you come very, very close to hitting the lower band, right? Which would be extremely undervalued and a great price to pick up Bitcoin or crypto, because this is taken as the crypto total market cap, right? And then in periods of overvalued time periods, you usually extend very, very close to sometimes even hitting that upper band, right? And as you can see in the 2021 cycle, well, we didn't quite get there. We got close. If we did get there, that would have taken the total cryptocurrency market cap up to about $6 trillion, right? Which we haven't even seen within this cycle. So ultimately, let's just remove that to take off some of the noise. Where are we right now? Well, we're actually undervalued, right? According to where the fair value should be for the total cryptocurrency market cap, which means the probability is high that the cycle's not over, right? We haven't got any sort of an overextension, not even close to what we saw in 2021, which was the least overextended. So I would still be waiting patiently for something like this to play out. Now, if we do have to highlight this and we move into where the price cycles have topped, which is typically around that, anywhere between September and December. So let's go with an average of about October. We'll go to the end of October. Where would that put the total cryptocurrency market cap? Only considering that it hits fair value, that would take it to about 4.65 trillion. And of course, if you do start to overextend slightly, like we've seen in the price cycles, well, you could very easily see that pushing up to about $10 trillion, which for the broader market is going to be anywhere between around a 3 to 5x return still on the table, right? Depending on which coins you are dabbling in. So a little bit of hopium, more hopium for you. The risk metrics have fully reset over here. So we are oscillating down here between the at least the 0.0 we're between, I think exactly we're on 0.57, right? So we're between the 5 and 650 and 60% level, which is your neutral territory. Sit on your hands, don't do too much. If you have great entries from the bear market lows, you're probably better off just holding that. However, I will outline what I will do next. I'll absolutely share that with all of you if my system at least starts to tell me to exit all long position spots included. And to tell the truth, we're very, very close to that if the market doesn't start to move. So if we start to break below the bottom of that trading range and, I would evaluate what happens at all the fair value gap bounce levels that I've just highlighted in today's show. And then based on what happens after that bounce, to be set in a lower high or not, that's probably where I would start to make some tough decisions. Stock market still looks fine. Here you can see it, right? Higher highs and high lows, just zooming in, getting a little bit more specific with these zones over here. There is major resistance over here, and you would want this to start to push through because the M2 money supply is moving towards the upside. This is also still continuing. Tesla is very close now to our target. So, it's already put in. Let's just grab our tool over here. Let's just expand that a bit. So far from top to current levels, since we highlighted there was a potential for a deviation, it's already lost about 1/3 of its value. With a massive market cap like Tesla has, that's absolutely brutal, right? A lot of call it safe traders would be pretty heavy in things like Tesla, and for them they're getting crypto-like moves here. 33% down, but I do believe it will come down here, which is 40%, which means that you're still looking at approximately another 10%, right? About another 10% or so before you hit the middle of that fair value gap. Problem is that the MACD has only just started to cross down, right? You've only got 2 bars down, and you're coming from quite a height over here with the moving averages. So I would just simply wait and observe to witness the reaction into that zone. All right. Okay, so we've covered Bitcoin, we've covered Tesla, the stock market. We'll maybe reserve some of the crypto calls for tomorrow's show because, today's Wednesday, one of the most important days in crypto, given the Fed is going to be speaking once again. We'll get a little bit more of an indication of what comes next. But I think that there's not too much else to report on. What I would suggest, though, is in this choppy market, I'd really encourage each and every single person to, try and up your education as much as you possibly can. One way that you can do that is you can join Whale School, right? So we are creating, or at least opening up spots for signups right now. Pause the video. Go through to the link in the description below. When you go through below, click over there on 𝗜𝗥. This is your ticket, right? 𝗜𝗥 is your ticket into Whale School. And if you do sign up, this is the quickest, easiest way that you literally will get $100. The current promotion is deposit $200. They literally give you $100, right? You need to have $100 at least in the account anyways in order to get into Whale School, because we need to see that you're real and a human. So 1, sign up to 𝗜𝗥. Number 2, deposit $200. Number 3, they're going to give you $100 just for doing that, which you can literally use to trade with. And then you also simultaneously get access into Whale School, where we're going to get started very, very, very soon. 7 days, 5 hours to go before the next cohort. There's a wealth of knowledge in there. And then if you want to unlock additional capital, there is ways that you can do that. Just scroll. Everything is listed there below. So that is it from me, folks. Thank you so much for joining. I appreciate each and every single one of you, and I hope to see you all in Whale School. I'll catch you all on the next one. Have a good day, and cheers for now.